Good morning, guys. So I'm just 10 pesos watch for me for the week. So this will be a quick one, just because there's nothing really complex about whatever we're watching for the week. So I'll just quickly start off with the DXY, where we where we positioned over the weeks, over the days. We've just been seeing the DXY stall. Maybe this is just the investors not wanting to jump the gun and just waiting here and holding to just see whatever Trump decides to do after the 90-day hold on the period on the tariffs comes to an end. But all in all, we can't really wait up until that time. So we'll just be I'm just staying cautious with the DXY. So we'll just have this on loose watch where we have this large pullback from which price could still come back into in search of more liquidity and sell off. But as of the moment, having pulled up and formed all of this corrective beat over here, essentially also retesting the back end of that. We have been following through with structure. We left that footprint over there, basically retesting the back end of all of that, which price came back into, tapped into, broke above, was slightly tapped into that area of inflection just above as well, sold off, and currently we could just form some continuation structure sell off. And we could definitely capitalize on some potential dollar weakness on some dollar cross pairs. But as of today, I don't really have dollar cross pairs on watch. I only have one, which is Aussie dollar, which is at the moment moving contrary to whatever we usually take from a correlation point of view with the DXY. So I'm just looking to take Aussie dollar short and just jumping on to Aussie dollar. How am I looking to take it? This is actually one of the cleanest pair that we have on watch. I'm just looking to play that range on the 4 hour. You can see that this is more of a 4 hour structure. If we just even clear that with a gap, another gap, and I'm looking for that gap to get filled, then we look to take a 4 hour risk entry. If not a 4 hour risk entry, if I just hide this, I'll just look for price to find its way up here, tap into sell off, and we look for a 5 minute flag after 1 hour retrace to take that all the way to the downside. So yeah, just an impulse correction continuation. So an insurance entry for that to basically just play this phase one, phase two, and phase three to complete that leg into that area from where we could see price react off of, similar to whatever happened over here, or we could even break beneath. We don't know, we are in those uncertain times, so just being patient and trading this on its own merit. So that's Aussie dollar for you. So just quickly jumping back onto the JP25. For the JP25, which is the Japanese stock market, we did tap into that area, pulled all the way back into an area of liquidity, and we have been climbing, and you can see that. So as of the moment, I'm looking for this to just keep trickling to the upside. We're having pushed back into that area, pushed back up, filled that gap as well, never really went off of this. We did come back into this ever so slightly more significant area, which was retesting the back end of that area over there. Tapped into it, pushed back up. So if you do get a follow through, we could get a small accumulation of volume here where we can clearly see orders being stacked on the lower time frame. So yeah, if we do get a follow through to this and we get a mimic of this correction over here, just over here, well, that you can look to capitalize on. And what does that mean with regard to the yen pairs? So I do have some two yen pairs on watch for today. One of them has a mind of its own, which is dollar yen, and I usually look to trade dollar yen on its own merit as well. But yeah, for CAD yen, if the JP25 does go up, then even just from a correlation point of view, I'll be looking for CAD yen to push higher, potentially even break out of the current bit of price that it's in. So just to study this bit of price over here, sorry. So just to study this bit of price over here, I'll just hide that as well, and that. Yeah. So looking at the current piece of price over here, we did have that small sharp footprint over there, which is not as significant at the moment. We have this area over here, which was still near missed. Price came back into this more significant value area where price wicked in to push up. We left those gaps, which were eventually filled. We somewhat formed a continuation structure over here that seems to have failed as of the moment, but pushing up into this third touch, we did leave this sharp footprint over here that went and price came back into it, and we can clearly see price reacting off of it. So if at all this was price just bottoming out before we then get that break to the upside. We can clearly see that this is an impulse, a correction, and if we do get that follow through for a phase three, even up, even just up into this area over here, then we can look to capitalize, and that in line with the JP25 also moving higher. Well, that does make sense. So dropping down to the 4 hour, what can we clearly see? So we have all of that having formed. I'll just mark on this area price hold off. And how did we approach this low over here? As you can clearly see, the lows weren't going that far from the initial low and from the initial lows, and you can clearly see that at this moment a lot of buyers were trying to test the result of the sellers that got into the market at this area over here, and eventually a lot of buy orders were stacked against the sell orders, so that order imbalance forced this piece of price to push back to the upside. So we did have this as basically our line in the sand, just right there. Price tapped into it, pushed to the downside, failed to commit, and we aggressively broke above that area. So having broken above it, we did come retest it, pushed up ever so temporarily, pushed back down, took that out, and currently you can see buy momentum coming into the market. So even just from a progressive understanding of price and me marking on this area as the first area of inflection that I'm focused on, I am looking to take this to the upside, marking this on as the area that prices tapped into some liquidity, and also this is more of the range play that I'm looking to capitalize on. So dropping down to the hourly, what am I looking to take? So I'll just take this. So on the hourly, what I'm looking to take is we have this as the area as our area of interest. So we could basically go for two ways. So this just drops into that area, push back up, and we get a two touch that ends up committing to the downside. That is one. And just looking at this on the 15, that actually has quite a high likelihood of happening. So if we just mark that on, and this pulls down into that area, then we come back into this area and we have this clear to touch. I'll definitely look to take that as a risk entry on the 15 or on the hourly. On the hourly, if we do get a 1 hour retrace, and on the 15, if you do get two 15-minute rejections. Alternatively, we could just climb into that area with structure, which will be actually more beautiful and something that I will prefer, and picture perfect as well. So if we do get that into that area for a structural approach, then I will be looking to take that as a risk entry all day long, even on the 15, and take it all the way down into this area over here. So that's Cardian. Sorry about the screen, like just gone on. So yeah, that's what I'm looking for Cardian. Even just down into these lows over here, if you just size that up, we take that with even a 12 pip stop, which will be more than enough and not uncommon. Even with a 15 pip stop, more than enough as well. Down into that lows, we have 2.49. Down into that, we have 6.07, and down into a first real area of reflection, we have around 10.82 to capitalize on. So yeah, beautiful positioning on Guardian as well, which is on my additionals. So yeah, now back to my top six. So I'll quickly just start off with Pound Card. I really like Pound Card, which is like one of the standard pairs for the week. In addition to Aussie Dollar, so from a daily point of view, we can even start from a weekly point of view because this is stacked from the higher time frame down. So from a weekly point of view, we can clearly see that we are at a very interesting area where a lot of sell volume did initially come into the market. Price tapped into that area, and for quite a number of weeks, price hasn't really committed from that area as expected. But we are still at an area where we could go, and we can clearly see that we have sort of forming, or rather topping out, and forming this potential double top for that to commit. And on the weekly, we can clearly see how beautiful that is. Two weekly rejections at that area to the left, where a lot of sell volume also did come into play. You can see by the candles that follow through, even that as a follow through of that weekly candle. Beautiful. So we do have more what we top at the top over here, and a really nice heavy body close on the weekly. So dropping down to the daily, we can clearly see that on the daily we wick through that area quite a lot, and even if you just play this down into half of this range, That will be really, really beautiful because at this area we do expect price to pull back maybe deeper, or retrace maybe deeper, or actually form quite a large continuation to warrant that next leg into these areas over here if we are to come down into this area. So on the daily, having dropped like that, we do have our confirmation price action dropping down to the 4 hour. What we can clearly see is that we have already broken out of this squeeze. If I am to just mark the squeeze on just like that, we have broken down out of this squeeze, and looking left, this is where that correction basically started. So the flip of those two 4 hour candles is where the correction basically started. So dropping down to the hourly, you can clearly see that we have that as more of a first area of interest. So if I just mark that on, what I'll be looking for, or rather waiting for, is for price to just come back into this area. Sorry, let me just pin it with that, come into that area, sell off. Then if you do get that as a three touch, that will be really, really beautiful. So I'm just looking for that to happen, and that is all actually proportional to the size of this impulse. So if we do get that form and we end up taking that as a risk entry, even with a 20 to 25 pip stop, that wouldn't be uncommon. Even 26 all the way down into this first area of interest, we have 8.49 to capitalize on. Even just to the base of that, we have 1.7, 1.9 to work with. So we can basically manage that structure. So down into that 8.646, beautiful, beautiful positioning on pound card. Next up, I have pound Aussie. For pound Aussie, this is actually a very, very interesting pair because of where we're positioned. We've ever so slightly tapped into. Let me just hide all of this. We have ever so slightly tapped into an area where there was quite some sell volume that came into the market. If you just study the price action to the left, we had this expanding price action over here, tapped into that area, and we sold off ever quite so aggressively. But again, we can clearly see that we do have an area of liquidity just above where there is volume sat and can be triggered before we then sell off. Also, just looking at how this piece of price has been forming, we did have this large accumulation of volume which broke to the upside. Having broken to the upside, we had this first continuation structure, more of an with an expanding feel to it. We pushed to the upside. We did form this more consolidative continuation, broke outside, and just outside it, we had this footprint over here, which price act back into, tapped into it, and we pushed further higher, tapping into that area over there. So at the moment, we are actually just arcing all the way back, and we can clearly see that by how price is reacting to that arc and the area that price is tapped into, we can clearly see quite some sell volume in this. Look at those 4 hour candles, very, very bearish. If you look at this on the daily, from where we could start off, look at that for a daily close. Look at all of just those rejections, and that looks extremely, extremely bearish. But now a catch to this is how the weekly closed. Look at the weekly. We did weak above that area ever so slightly, and we can clearly assume that the orders that were sat at that area have been washed out. And an alternative to that is that we could basically get a weak fill, which usually happens during the immediate next week most of the times. So if that is to happen, we can clearly see why price will actually move higher. So with regard to this, I'm actually more bearish on this, but again, I will keep an eye open for the longs, and I won't really marry my bias as much for this, because if this breaks just beneath this area and we get a continuation structure in the hourly of just beneath that area over there, that will be lovely. An alternative is we end up forming a continuation structure just above this area with a near miss over there, just like that. That will be really, really nice, because the amount of volume that will be built up in this structure, which is extremely deliberate, and also retesting the back end of that, will be more than enough to break through this area over here. And given the weekly, or rather given the daily candlestick formation at that area, I don't really expect this to hold as much, and we could even see price moving down into these areas over here. So an alternative for me to look to take that long is we do have our first touch or second touch, and that is more of a middle section. So given this is quite a large structure, I'll wait for price to slightly break beneath that area, push back up, and if we do get a continuation structure over here on the 15, I will definitely look to take that long. So we break beneath, break back up on the 4 hour, and then a 15-minute continuation structure will take that long. Next pair is $1. I have gone through that. The next pair that I do have on watch is Dolayan. So just for Dolayan, this is actually a very simple play. For Dolayan, we did push to the upside. Something to note on Dolayan is that we do have a gap, so uh, makes logical sense why price could come back down, come back to the downside. We did leave a gap into that area, so I am looking for price to gravitate back into that area and fill that gap. We can clearly see that we're sort of in the middle of the range, so we push to the downside, retraced almost half of it, or slightly just more than half of it, and we did retrace back down. So dropping down to the 4 hour, what can we clearly see? We did have a footprint left after price just broke beneath these lows over here, retested it, sold off. We have a continuation structure and price followed through. So price has gravitated back up into that area, tapped into the volume that was formed over here, and pushed ever so slightly higher, tapping into the liquidity over there. So we have pushed to the downside. To the left, you can clearly see price accumulate some volume over there. And at the moment, we are also mimicking whatever is happening there with some volume accumulation for that to potentially follow through to the downside. So just by understanding that, now we can drop down to the hourly and try and see whatever is forming. We can clearly see continuation over there, follow through to the upside. So at the moment, I'm looking for this bit of price to just come back into that area, tap into it to have that high over there was taken out, but we still left a gap into that area. So I'm looking for that gap to also get filled. And if we do get price from something of the sort with a 1 2 3 into that area, risk entries on the cards for me on the hourly with on our retrace candle, or rather 1 hour pin bar all the way down into that area, even with a 24 pip stop, 9.92. Beautiful positioning of that. For Euro Aussie, I'll be really quick on this. Initially, we did tap into this area over here, and we were really looking for longs or rather shorts over here. We formed some stalling price, but did not really confirm the structure. But what ended up happening is that we followed through on whatever price was forming with an impulse correction and continuation, and that then evolved into a phase one, phase two, and phase three to complete it. But if you look at the size of this and the size of this, they weren't really proportionate, and what ended up forming was praise actually formed a larger structure, having tapped into the prior area of inflection to the left where there was some volume sat as well. So now we have this as our large phase one, that as our phase two, and now we are looking for that as our phase three. This normally do go long higher than this area over here, so because even if we were to just size this area up from there into that, and we come and measure where that comes into, we can clearly see that we have this area over here, which is also significant. So even just up into the area that we read on, I'm not looking for much. You can clearly see volume being accumulated over here. So given how this piece of price is forming with it, arcing all the way back and looking more like this, I don't expect this. I'm not really seeing this form into a three touch. So if we do follow through that candle and we get a continuation structure over here on the 15, which I can filter down to the 5, I'll be looking to take that long. And the last pair on my top 6 is actually Kiwi Card. And for Kiwi Card, nothing really complicated with this. We did push to the upside, we left that footprint over there. Look at how we're coming back into that area. First touch, taken out, we leave a gap into that area. We fill that gap, still leave that gap into that area. Second touch, still leave that gap. And I'm looking for that to be taken out, that gap as well. Those gaps as well to be taken out to tap into that area. Push up, given the size of this, I'll opt for an insurance entry. Take the insurance entry all the way to the upside, and you can clearly see every time we feel that gap, having gotten that, we get an aggressive burst of momentum to the upside. So if you do get that, and that is the one that goes, beautiful. But again, we never know the one that really goes, so we just wait and see whatever happens. So the next pair that I have on major watch is Pound Swiss. And for Pound Swiss, I'm actually looking to take this two ways, where we had price up back into that area. On the weekly, we can clearly see the type of price action we got. Look at that for a bearish pin bar, having filled the wick to the left as well. So I'll just hide all of that as well. There we go. Look at that. Beautiful. On the daily, we can clearly see the momentum, so we could follow through from that area, or we could tap into that area, then aggressively push back to the upside. We're still in structure, so either way, that can still happen. And yeah, so those are the major pairs that I have on watch. This one, my corrective stall, continuation flat, and we go. But yeah, that's all I have on watch, guys. Cheers.